Today, I'm going to give you some overview of Atlanta market, and we're also going to discuss briefly the article that was published by Zillow. They hired a company for them to do the research for the nationwide market. What's interesting about that article, the first thing that stood out is how the authors and people who are writing these articles trying to create a sense of fear in you. They called today's interest rates sky high. So they are around what, 7.5?
Yeah, I'd say a little bit above 7 right now. Yes.
And then I realized that immediately that when I purchased my first home about 20 years ago, that's the rate I paid, because that's all I was able to qualify for. FHA I think it was 7 or 8% rate, with a 10 times less income than is available to me today. So do you have any comments on that, Tim?
Well, I think, again, people coming into the housing market in the last, let's just say 10 years, it's like hearing the story about when your father, when they went through the Depression or whatever, you hear that when I was your age, this is what happened. But certainly if you had a mortgage before, let's say 2001, 2000, in that range, you pretty much could be looking at potentially getting an ARM at like 7.5%, because the fixed rates were more like 9%. And again, if you even go back to the 80s, we're talking in the 13 to 15% range. That's sort of the all-time high, and I think something hopefully we'll never see again. But in the context of the big scheme of, or the grand scheme of where we are on the range of interest rates, I would say we're a little bit above average. Maybe average I would consider to be around 6% if you look back at the last 20 years. But that also puts into context, being at 2.5% or 3% a year or two ago is also abnormally low. So I think we'll probably settle back. It's, again, this is Tim Brown speaking on, what is it today, November 2nd. I think the low 6s, high 5s in the short term, meaning maybe by this time next year, and potentially lower depending on how the economy does in 2023.
Thank you, Tim. Another thing that is related to our topic, and I would like to share this article. The panelists have mentioned that metros in the South and Midwest are the least likely to see price declines over the next year. So if you're not sure and want to wait and hope that prices in Metro Atlanta is going to go down significantly, according to Zillow panelists, it's not going to happen in the South. Vacation markets and will see a decline in values, and the areas that grew faster than other areas, those will decline. Another interesting thing is that they expect the rent growth to go relatively higher compared to any other ranks. They're comparing rents to rent prices to inflation, stocks, home values, and this is for the next 12 months. They expect the rent to go much higher, even above any projectable mortgage payment, monthly mortgage payment. And that brings us to another question that home builders have turning to build affordable, they're starting building more apartments and condos rather than single family residential. Right, Tim? So
that makes sense.
So that makes us think, all right, if you're on the market for a single family residential, and typically we expected, new construction to supply a certain percentage of new homes to maintain a healthy inventory. If that inventory gonna go down, then there will be no competition with resale homes. So expecting values to go down significantly when the inventory, according to that article, is about 42% below of the same time in 2019. So if we're ever gonna see buyer's market, it's not gonna happen overnight, and probably not in 2023, because if 2019 was seller's market, a strong seller's market, right now we have 42% less inventory, less homes to buy than 2019. So how that gap will be closed to make it a buyer's market, I don't know. Maybe Zillow panelists can give us the answer.
Yeah, I mean, if I can just add something, I think the other dynamic here is simply the fact that cities in the South, like Atlanta, Charlotte, for example, are growing faster than the average in the country because people would prefer lower cost of housing, lower cost of living, which you usually see in places like Atlanta or Charlotte, but also because the folks are moving here at a faster pace than either apartment complexes or homes are built, that you're going to have a net negative effect because you have fewer houses, and let's call houses and apartments, then you have people that are looking for them, and that's going to exacerbate the, even though the population stayed basically the same. Your point about the new construction makes sense, but with people moving here, young graduates from college looking to go to the big city to find a job, they're coming here and more every day than they had been in the past, and that's why. I think in that one of that article's forecasts is many states had net negative value improvement in 2023, Georgia being one of the exceptions to that, which doesn't surprise me at all.
Correct, right. Well, just an example. Yesterday, I've put a house, my listing under contract, still mid-range price, 600,000, with multiple offers. House was not updated, to attract many buyers, but there were still buyers looking for that floor plan and for that location, for that specific subdivision. And the agents were frustrated with me that other agents who brought buyers, they were frustrated with me. They tried to educate me. Hey, market is not that it was how it was before, and it's very tough time for sellers right now. And I was listening to them, holding 4 offers in hand. Price offers, thinking you don't need to educate the listing agent. Go educate your buyers. Go do your homework and see what is the competition for this specific listing. Bottom line, if you're thinking of putting your house on the market and wondering when is the best time to sell, when you're ready, when you know your destination point, and B, fourth quarter and first quarter, typically historically very good times to put homes on the market, because there's less competition from other sellers, but there are a lot of motivated, serious buyers out there. Would you agree, Tim?
100%. And I think also that more homes coming on the market, buyers have been sitting there on the sidelines waiting for a while for rates to come down. I think maybe the reality sunk in that while that may happen, it's not going to happen maybe in their timeline. So they're still going to be out there, in my opinion, at least looking for homes. And the ones that are out there, particularly in certain areas of the county or of the metro Atlanta area, plus in the right price ranges are going to be as gobbled up, just like your situation where you have multiple offers. That's not shocking at all.
In your experience, Tim, how many times people refinance their homes because of a better rate or pull down equity on average?
That's a good question. The first question is how long are people in their homes? And that number has gotten shorter. I mean, many people lived in their homes. Like my parents, they burned their mortgage deed probably 15 years into it and didn't move out. But nowadays, I think people between being transferred and also maybe wanting to, the stage of life, you have a new couple, then you have kids. I would say I probably refinance the average homeowner twice. Now, again, let's be honest about that. That also is dictated by interest rates. So if rates go from, let's say, 7 to 5%, people are going to race to want to refinance. If they go to 3.5% or 4% after that, then certainly they're going to take advantage of it. But if rates go to 5% and they don't move, then that's probably, maybe one time for a family in a home, unless they're in needing to get cash out to do some repairs or whatever. So that would be my estimate, between 1 and 2 times per home buyer that I work with.
Great, perfect. Yeah, it just supports exactly what I was thinking of after reading that article about sky high interest rates. We refinanced our first house, I think 4 times in 10 years because rates were good or we wanted to pull some equity. Then our current home we bought, Tim did 14. The loan for us. Yeah, exactly, 2015. So was it 7 years ago? I think we refinanced it also 3 times already in 7 years.
Right. They also went to a shorter term too, which I would always recommend, especially if, from a financial perspective, if it makes sense. Obviously now with rates where they are, that's probably to be, when people really want to just get their 30-year back to something that's a little bit lower than what it is today. And I'm hopeful that happens. I think we all are. So, and I'm reasonably confident, Will, that certainly I can't predict the future, or else I would be on buying stocks on Wall Street without having to worry about the outcome, because I already knew the outcome. So that's my best educated guess.
Yeah. So the bottom line is, I wanted to share with everybody, when you're reading articles or listening to podcasts, try to avoid those generalizations about prices home values are crashing, prices are going down, or interest rates are skyrocketing. Real estate is so specific to the location. Just reach out to us. We will show you what market is doing so you can plan accordingly. Right, Tim?
Yes, and just as a side note to that, as we enter 2023, one good piece of good news, I think, for most home buyers is that the conforming loan rate, which is the conventional loan, maximum loan amount that you can put as little as 5% down, is going up from $647,200 in 2022 to $715,000.
I'm sorry, can you repeat that, please?
So the maximum loan you can get, which you hear the term Fannie and Freddie, those are the two sort of quasi-government agencies that essentially create a market for mortgages under the maximum limit that they have, and they raise their maximum loan limit based on home prices. And for example, in California, they have them higher than they do in Georgia because California home prices are higher. But for Georgia, all counties in Georgia went from a maximum loan amount, not purchase price, but loan amount of $647,200 in 2022, and they've announced that it's going to be $715,000 in 2023. What's that? $70,000 an increase in purchasing power. And the reason that's important, and let's say you're buying a nice townhome or something that's $800,000. Let's say $785. In the past, you would have to put 20% down. In most cases, maybe 15% down in certain circumstances with good credit. Now you're buying that place, and you can, again, if you don't have all the assets for 20% down, you can do it with as little as 5% down, and that's a really good deal. That's a really good deal.
Favorable rates, right?
Yes, correct. And the rates will be better if you're going in a conventional loan in that circumstance. Yes,
So now these rates are available to you, even if you put in 5% down.
Right, and while it's for 2023, it's like anything else. They're going to recognize that most lenders are going to accept loan amounts at 715 or below, starting the 1st of October. So essentially, if you buy a home now and you're needing to borrow up to 715,000, then you can do that today. Don't have to wait to buy into 2023. They just announce it for the fiscal year 2023, which technically begins at the end of the end of September, early October of this year. So
great news. Please reach out for details to Tim Brown. You will find the information under this video. Just wanted to wish everybody a great rest of the day and rest of the week. And we're here if you have any questions.